Hi everybody, this is Ben Chai, the Doctor Who of business, putting on my broadcast personality. And what do you think of it? I'm in this gorgeous, gorgeous house. Look at this. Wonderful, wonderful place. And I've got an open hearth. Is it a heart or hearth? Fire just behind me, look at it. Oh, lovely, isn't it? And I've got a special guest star today. My wonderful, wonderful co-director. I'll just go and sit on his little on my lap. Oh, jeez, nearly fell over. It's Miles, look at it. Hey,
Hi,
Miles.
how you doing?
Miles, do you have a different personality when you're broadcasting online to like your normal conversational?
Yes, I'm a lot more animated.
But it's true, isn't it? People have different personalities for, like, when they're just chatting with other people to their stage, and even I'm wondering if they're broadcasting.
So some people have a chameleon attitude, personality. I remember being told as a young person that's a bad thing to have because you want to be yourself and only just be that person. The way it's worked for me.
I can't get up to your level. Sorry.
You'll sit in my lap, man.
No. Maybe we should move to the couch.
You're flirting.
Maybe. So yes, carry on.
The way having a chameleon personality has worked for me is being able to adapt to different personality types, which, from my opinion, helps me to get along with more people than if you're very solid and you only have one way of being. Some people may find you offensive, or some people may find you meek in certain situations. But when I've adapted my personality to other people, it enables a better rapport, I think.
I think you're right. There's something I've broadcast about in the past called requisite variety, and people who can vary themselves in different circumstances have the better chance of survival. Interesting, right? There we go, everybody. Oh, there's a little... So we've been going through our business plan today, myself and Miles and two other directors. And what we thought we would share about property today is risk. Risk, not the game. Okay, so Miles is actually particularly good at defending against bad things happening, and it's really important to have your own risk register. So Miles, I'm just going to let you talk a tiny bit here.
Right.
Love your smile.
Thanks. Risk. There is risk in anything. I mean, there's the old expression, with no risk, there's no reward. And the greater the risk, the greater the reward. One thing that we've been doing today is trying to identify, when we're investing in property, where the risks lie. And that could be in anything we do. So from our investors' point of view, they have a risk in investing in us. We try and mitigate as many of those as possible by doing as much due diligence as possible. So when we look at a deal, there are many risks that we identify, such as the general market, the area. If there's no demand for a specific type of tenant, i.e. contractors, then you wouldn't buy a property that's suitable for that. You'd look at other ways to fill that property. So say, for example, there's a university nearby. You'd buy a property that is suitable for students, suitable in terms of size, in terms of what they expect from a student property, and in the location as well.
No, I like that, because actually, so from the investor's perspective, not many companies do this, but to prevent investors losing money, we underwrite their investment.
We do.
Yeah, which is quite unusual for people in the property world, because if you invest in money, well, that's a risk you take, but we take that risk off of you to help with the investment. But even with, you mentioned the student properties, which was fantastic. So one of the areas that we invest in, if we do buy student properties, we work out several other kinds of people who could live in that property.
Yep. So one of the things we do is when we decide to purchase a property, we will always make sure there are 3 exits, for example. The first exit could be to rent to students. The second one could be to rent to professionals. Third exit could be do it as a buy-to-let instead of multi-let, or just sell it on once we've added value to it.
And I know that Keely hates it if there's only one exit.
Yeah.
And she says, no, we're not investing.
Yeah.
But it's good, Keely. No, we need to make sure that our risk profile is what's it? What do you call it? The risk. Anyway, we need to mitigate against the risk, and one mitigation is not to invest in that particular deal.
Yeah.
We've written a few other ones for properties, didn't we?
I mean, for our property company in general, Brexit. One of the directors, what happens if they were to exit?
Yeah. So what happens if you fall out with one of the directors, or they die, or they get severely ill, or they just want a different life? Yeah, that's a potential threat.
Changes to property legislation. So, say for example, the minimum room size for properties has recently been changed. Depending on the area, it will be slightly different. But if you have, say, a 4-bed property, you're renting out room by room, one of them is below the minimum room size, it means that you can no longer legally rent that room out. So you've immediately, just because of a change in legislation, you've lost that stream
of income. Yeah.
So that's why it's important to have alternate exits, alternate ways to operate your property should anything like that change.
Do you know, it's quite interesting because I remember saying to one of our builders, that room is too small, and he was going, no, it's fine. And then the council said, no, that's too small. So very, very important. And I think, you know, one way to ensure that you mitigate against the risks is just think what's reasonable. So, for example, in Egham, where I have a lot of my portfolio, there are some very tiny rooms, but I actually knocked down the wall to make them larger. And when I bought them, it was okay to have those tiny rooms, but it isn't today. So I think just looking at what is what you would have if that was your room is a great way to underwrite risks. What about Brexit? How would we defend against Brexit happening? And what is the risk with Brexit?
The risk with Brexit is that that our values are affected. So if we're going through a refinance, or if we've agreed to buy a property and then there's a sudden change in the market, the risk is there. So one of the things that we do to mitigate against that is, firstly, when we're doing our calculations, to allow for that in our calculations. So we'll be a bit more pessimistic with what the GDV, or the gross development value, or the done-up value will be when we come to refinance. So if there's not as much of a change as we expected, then it's a bonus. We've got a bit more out when we refinance.
I love what you're saying, and actually, you know, people say, "Oh, I don't want to be around negative people or pessimistic people," but I think that's a really great way to mitigate risks in finance.
I think the reason that we work well together, the 4 of us in Propertunities, is that we have slightly different risk profiles. So I, for example, will be maybe a bit pessimistic, which is good because we'll be. Hello.
Hey! Look, there's one of our mentors. Where is he? Let me just. Are you going to us over here, Peter? You're very dark over
filming me?
Yes, we are.
You're live on the internet.
Yes, one of the best traders in the world, I would say.
I've lost my train of thought now.
Yeah, Miles thought the fire goes very well with our broadcast, our filming.
Excellent.
Right. Thank you, Peter.
Brexit.
Oh yes, let's just tell our viewers a little bit about Peter, because he's an amazing guy.
Peter is my dad. He's a fantastic father. He's taught me a lot about business. As he's an older dad as well, he's very wise. I was going to say he's a bit wise. He's very wise. So I've learned a lot from him. His background was in shipping. He worked for 4 different companies in his whole career. Headhunted to go to America, came back here. He did pretty well. He ended up being director of a company called Hal Robinson, and also he is one to avoid risk as well.
He is,
because not only did he have his main profession, he also spent a lot of time looking at the stock market, investing in the stock market to make sure his.
But he created a great passive income with his trading strategy.
Yeah,
because I went through it with him.
Yeah, his focus wasn't just on dividend stocks. So dividend stocks or stocks and shares are things that pay a regular income. So there are 2 main ways to make money through investing in the stock market. There's the dividend, and then there's the rise in the value of the share. So his portfolio was, or is, diversified across income producing and
appreciation,
which
is what we do in property.
Which is exactly what we do.
Exactly that. So that's why Miles is so cool at it. He had a great mentor from his dad.
Yeah.
So Brexit, where we were talking about mitigating, because like the problem is if the price goes down with Brexit, then if we've got angel investors involved, then our refinance isn't going to pay them back.
Correct.
So that's why you really need to think about Brexit and the impact.
I mean, in general, when doing your calculations, when trying to decide whether to do it to buy a property, it's important to look at all the possible moving parts. So, for example, you're looking at the possible purchase price. Can that be brought down? Can you make an offer on the property and get it for a slightly lower price? The interest rate that you're paying, either your angels or the bank when you come to mortgage, you should leave that at a higher rate. So, for example, we look at 6-7%, when in reality a buy-to-let mortgage that could be 3%, sometimes 2%. So we've got that bit of wiggle room. Also, the money you're spending on refurbishing the property, if you are indeed refurbishing it, always allow a contingency for that. So some people say 10%, some people say 20%. Depends how.
We were working on 35% today. My goodness! And I thought, oh wow, this is going to really help us be profitable because we took a very pessimistic view of situation.
Yeah, and things always go. They don't go to plan in a purchase and a development.
Well, in anything really.
Yeah. The important thing is how you actually deal with that, and whether or not you've allowed for things to potentially go wrong, which is why contingencies are important, especially in the building.
If you're dealing with risk, or if you've got your own strategies, do share it in the comments below. What are some of the risks that you face with property development? How have you mitigated those risks? Let's just share a few more. We won't share all the ways we're mitigating, but some of the things that you need to think about that we've written down for our own particular business, and it will be different depending on your property strategy. So what have we got down?
One of the situations is what happens if one of our investors that's invested a large sum, what happens if they suddenly need their money back and there's nothing we can do about it?
So how do we protect against that?
So, one of the ways is to make sure that we have other investors lined up ready to invest, which we always do. We have to have alternate ways of replacing their money. For example, would we be able to get bridging on it? Would we be able to call on a different type of lending? So we're talking with a company at the moment that...
Ooh, my hand shook there.
that give you effectively a personal loan based on your income. So they'll, I think they loan double of what your income is, and that's fairly quick, and it's for 6%. So that's one way to potentially have that money on tap quite quickly.
Right. So just to share, rather than the mitigation, some of our other risk things that we have written down. So perhaps if you're using angel investors, or your angels pulling out at the same time, I know it's impossible to happen, but it's a risk, and we've seen run on banks, haven't we? When people who were putting all their money in the bank pulled it out.
Defocus on goals.
Yeah. So
valuations.
So if you're not focused on your goals, you get involved in different projects. You won't hit your financial freedom target.
If the area in which you're investing if there's a big company that provides a lot of the work for them,
employment,
if they close down, what happens to all those jobs? Does that mean that if you're running an HMO, does that mean that it's going to be really difficult
to rent out? Yeah. We've got property income dependency. So if you've got voids, how do you defend against that? And I think, personally, I'm a great believer in having some passive income and also active income, because that defends you against a lot of potential loss in passive income. We mentioned legislation changes, so we noticed that a lot of landlords are getting out of property because of the increase in stamp duty, and also the the fact that you can't take you can't use the interest that you're paying on the mortgages anymore as an expense. So, which is a crazy thing to do, not to be able to do. Falling out with JV partners. Sorry, am I reading them? I'm sorry.
No, carry on.
No, please.
You're equally as good as reading a list than
I. Yes. It was the only way I could share anything.
Contractor underperformance if you're working with a builder and they don't perform as expected. If you have to redo some of their work, that's another one. Student pods.
Oh yeah, which if you're doing a student landlord, there's a lot of pods being set up at the moment, and again, there's been houses empty because of that, because the universities have been taking the rental away.
Yeah.
Please do share what your strategy is, and do share this video if you found it useful with other property investors. So this is Benjai, the Doctor Who of business.
And Miles Bulloch. I don't have a strapline.
Miles
If
Bulloch.
you can come up with me, then come up with one for me. That would be fantastic.
Will you give them a prize? Will you spend 1 hour giving them consultancy for coming up a great
That I will do.
strapline?
You have my word.
So that's the most incredible, the spectacular, the fantastic Miles, and Ben signing out. Bye.